Hello, everyone, and welcome to the sixth webinar on silver, a high-tech and monetary metal. I'm Peter Krauth, and I'll be hosting today's event. We have a great panel of silver mining and royalty streaming companies with us today. They are Morgan Lextron of Silverhammer Mining, Brett Heath, CEO and President of Metallo Royalty and Streaming, and Taj Singh, CEO and President of Discovery Silver. So today's format will be that each of us will do a short presentation followed by a panel discussion and finally a Q&A session. So let's get started. I am Peter Krauth, and to give you a little background on me, I've been researching and writing about resources and precious metals in particular for the last 20 years. I write Silver Stock Investor, a silver-focused newsletter. It's all about what I buy and sell with my money. I cover the full risk spectrum from silver ETFs and large producers all the way down to junior explorers. And it's aimed at new and experienced investors, everyone from, including everything from low to high risk stocks. It's published by Resource Maven. It is all independent research. We're exclusively supported by subscribers. We don't take compensation for the companies that we cover. And as a precious metals expert, I contribute to multiple media outlets. One last note, I'm working on a near-term launch of a book on investing in silver called The Great Silver Bull, so look for that in early 2022. So this is an interesting chart that I thought I would start with. Silver is kind of at a crossroads amongst several driving elements in precious metals. One is that, of course, it's a monetary metal. It's been money for over 5,000 years. That makes it a great inflationary asset and protection against inflation. And now, in the last sort of maybe couple of decades, it's become a higher tech metal. It's certainly a big part of the green revolution. We're starting to see a lot of silver in multiple electronics applications. We certainly see it in things like silver panels, EVs, electronics, especially high-tech electronics. And the fourth point about silver today, and that I think is certainly worth noting for investors, is that it's historically undervalued. Silver at about $24, $25 per ounce is still about 50% below its all-time high. And if you use inflation-adjusted numbers, silver is about 85 to 90% below its all-time high. So there's certainly lots of compelling arguments to invest in silver. If we look at the demand side of things for silver, and this excludes ETF demand, last year about 50%, a little over 50% of silver demand came from industrial applications. 22% of silver demand came from physical investment. And as I say, ETF demand is not included in this, and yet it's a substantial part of overall demand. Like I mentioned earlier, silver is certainly a high-tech metal, with 54% coming from the industrial side of things. Solar alone represents 10% of all silver demand every year. Electric vehicles actually consume about twice as much as the internal combustion engine technologies for automotive side. And then on the medical side, you have nearly daily developments in terms of applications for silver. Silver is used in all sorts of things like cornea replacements. You find nanoparticles of silver in as well in contact lenses. Silver is used because it kills bacteria, so you find it in equipment, embedded in tubing, and all sorts of other applications on the medical side. And this year, the Silver Institute expects that industrial demand will be up about 8% over last year. Now, if we look at the investment side or the monetary side of silver, we can see that that's been, the demand's been exploding. Last year, silver global ETF demand for silver was up 331 million ounces. That was triple the previous year of 2019. And so currently, silver ETFs globally hold about 1.15 billion ounces, which is more than an entire year's supply of silver. And the Silver Institute expects that ETFs are going to consume another 150 million ounces this year. And that will be up about 30% over 2020. We've seen ever since, especially since the pandemic hit in March of 2020, the premiums on physical silver coins and bars are up from double to triple normal levels. And if you include the ETF demand this year, expected ETF demand in overall demand, which, as I say, most research does not include. But if you do include it, then you're at a net supply deficit of 16%, which is quite substantial. So let's turn to the different companies. I just want to mention that we're going to be talking about how all of these trends are impacting silver. And we'll start with Morgan Lextron, CEO and President of Silverhammer Mining. The floor is yours, Morgan.
Thanks for having us, Peter. And thank you for the talk about silver there. So I'm the President and CEO of Silverhammer Mining. We are a recently formed silver company. About 7 months ago now, we came to the market on the CSE, and we're a company that is focused on building a near-term production, but also large exploration payoff mid-tier mining company with 3 past producing assets. I didn't put the forward-looking statement in here, but I'm going to make some forward-looking statements. So we have a portfolio of 3 past producing assets. One being in Idaho, it's called the Silver Strand Mine, about 40 minutes outside Coeur d'Alene. It had only ever produced down to about 90 meters in depth. The monster mines around that area have produced down to about 1,800 meters. This unique. It's very unique in the sense that it produces silver at a fairly high grade, but it also had a gold credit up to about 5 grams a ton. So we're really excited to start to keep drilling our underground and doing our exploration, in which we're doing right now. We picked up 2 projects in September, one called the Eliza and one called the Silverton. Eliza is in Nevada, between Ely and Eureka. It's in the historic Hamilton district. This district was the district that was responsible for Nevada being called the Silver State. It was the largest silver rush between 1860 and 1870. And it has not been gone back to with modern technologies. So high-grade silver came out of there up to about 18,500 grams a ton equivalent. And again, no modern exploration has been completed. Silverton is about an hour out of Tonopah. And this area is very interesting because it had a past producing mine, 933 grams a ton silver produced out of it in 1930s, walked away from. The area around it has been explored fairly well. There's a lot of geochem. There's some drill holes around it showing just a bit of a gold system around it. And then when you get onto our property, it's the flatter portion of the area, and no one looked at it. So when we picked it up, we started doing geochem. We started doing sampling and mapping. Remember, this was only 2 months ago, and we were starting to see some good results from our sampling program and our mapping program. So we'll be announcing those fairly soon. Also want to talk quickly about our team. Next. Big thing about us, we've got a very tight share structure. We're 37.5, but well, actually 37.9 million shares out now. 2.6 million options, 2.7 million options, and 7.8 million warrants. I say ish because they're being cashed in daily right now, so they're adjusting daily. Our market cap's right around that $30 to $32 million right now. So very tightly held share structure. Phase 1 of our exploration at Silver Strand, being that it was a past producing mine, we went into the underground. We went in, rehabilitated it. We drove a new drift. We put in a new drill bay, and we decided, you know what, we're going to drill over to where they had drilled before, but we want to drill a little further away to try to cross-cut the ore body a bit more. And we kicked that program off here in the late fall. We did a little bit of surface drilling just to test for some structure. And now we're drilling our maiden drill campaign at Silver Strand. And I was just down there last week and proud to say it's going very well. A bit about our life. Like I said, it's in that Hamilton district. That was that massive silver rush from the 1860s to 1870s. There's a lot of old little mine workings around there. So we're approaching this with modern technology. We're looking at using satellite imaging. We're doing sampling. We're doing geochem, geophysics work. Remember, all this was only happening about 2 months ago. So that's when we picked up this project from a gentleman named Dave Forrest. So we're working pretty hard to get as many drill targets as we can on both our Silverton and Eliza project. Silverton being that historic 1930 district, 933 grams a ton silver. That's a picture of the old mine shaft. I took that myself. I spent a week down on these properties, and we're looking to have some good catalysts coming out of Silverton and Eliza in the very short order. A little bit about myself. I'm a mine builder. I've been 14, 15 years in this industry. I've worked for companies like Freeport, McMoran in Indonesia. I've spent a number of years at the Oyu Tolgoi complex in Mongolia with Rio Tinto. I've spent time building a mine in West Africa and Ghana for Golden Star Resources, and recently with Sabina Gold and Silver setting off their engineering and Arctic program in their marine laydown facility. So my background leans to take it right through exploration all the way to production, but also concentrate on that large exploration payoff and production goals. Phil Mulholland is our chief geologist. He has an extensive amount of experience between Montana and Idaho. So very exciting having Phil there. He's been in the industry for 35 plus years and worked for large companies like Barrick and knows the rocks in the Revette Formation in Idaho, just like the mine and just like how it sits. Lawrence Ralston, one of our main directors. Lawrence has been in the industry for 40 years. He's a bit of a staple. He's been around. He started Resource Opportunities, chairman of Metalla, Royalties, which are on this panel. And Lawrence is an exceptional wealth of geology knowledge, capital markets knowledge. He brings a unique aspect to this team to help us focus on the exploration side and the capital markets side. Ron Burke, we just added to the board. He was the vice president of exploration for Silver Standard Mining, now SSR, that multi-billion-dollar company that was focused on silver. He was vice president of exploration for Centerra. He was also the chief geologist for Silver Standard. So you can kind of get the picture. We're putting together exploration experts, mine builders, and with Jonas Lang on our board as well, we're putting that capital markets focus on the company. Jonas is an expert in capital markets. He brings a value to the team. He's raised hundreds of millions of dollars on the capital markets side. He's the executive vice president for Maple Gold. Thank you very much.
Morgan, thanks for that great overview. We're going to jump on to Metalla Royalty next with Brett Heath. Brett, floor is yours.
Thanks, Peter, and good morning, everyone. Thank you for listening in here and having me on. So my name is Brett Heath. I am the president and CEO of Metalla Royalty. We are a New York Stock Exchange and TSX Venture Exchange listed royalty company. We're focused on precious metals only. Just about 100% of our exposure of all of our assets is across precious metals. And what I'd like to kind of talk about first is really just royalties as an investment. I mean, royalties are just the most amazing assets I've ever come across in the resource business. They're non-dilutive at the asset level. They're free carried. They result in top line cash flow into perpetuity once they're in production. So they're just incredible assets. And if you could put them together in a portfolio with certain characteristics, I believe it provides for, one of the best, if not the best option for investors to get that risk-adjusted exposure with a significant amount of leverage still latent within the assets. And so I believe that's what we've done with Metalla since we started. And we had to pick a way to do it. This royalty business, I'm sure many of you are well aware, because it's such a great business model, it's become incredibly competitive. And the reality is this is the most competitive I've ever seen it from when I have started Metalla over the last 5 and change years. Even prior, when I was a fund manager in the business, dating all the way back to 2009, I haven't seen anything from a competition perspective. So we at Metalla had to figure out a way to really capitalize and find kind of our strategy to be able to excel in this sector, and that was the third-party market. And at the time, there was not very many companies doing this. I mean, it was really a one-off transaction by the larger royalty companies, and we saw this as a huge opportunity to focus on it. And over the following 5 years, we've done just that. We've completed 27 transactions, acquiring 70 royalties. We've deployed, upwards or over actually $180 million worth of capital. But what is important here for investors to understand, and what really drives, value and returns over time, is being able to acquire high quality assets on proven geological trends at accretive prices. And that sounds easy, but it's actually incredibly difficult to do in this sector. But using our strategy of the third-party model, we're able to buy royalties from third parties. So not the actual mining company, but we've been able to consolidate up royalties from third parties. And these third-party royalties are on the biggest of the biggest mining companies, the blue chips, the Newmonts, the Techs, the Pan American Silvers, the Barricks, Kirkland Lakes, Agnico Eagles. Our royalty portfolio covers not only projects operated by the largest mining companies, but also projects that are on the most proven geological trends. And these are the areas that end up building companies. They've built some of our much larger peers, because it's these high concentrations in certain areas around the world where you see the biggest mines. And so this is where we really focused, and we focused, more importantly, acquiring these types of assets before we saw significant growth catalysts ahead. And so we've been able to do that, and more importantly, we've been able to do that on an accretive basis. And 26 out of our 27 transactions have been non-competitive bilateral deals. That means just us and the seller. No process, no competitive environment, and that is what has allowed us to really excel. Now, in this day and age, the top risk that we see, compared to 10 years ago, is really from a jurisdictional perspective. We're seeing it more difficult for mining companies to get assets permitted and built, and even ones that are already permitted and built, we're seeing permits pulled. So I don't think there's ever been a more difficult time for mining companies to operate. And so concentration on good mining jurisdictions. So not only the proven geological trends around the world, but really the concentration on the good mining jurisdictions. You can see, we've covered huge concentrations in Canada, huge concentrations across the US, primarily the trends in Nevada, and other parts of North and South America and Australia. We've got a very tight share structure. We're in 3 ETFs. We've got some amazing shareholders with BD Capital, Adrian Day, Euro Pacific Capital, just under 44 million shares outstanding, no warrants. As of today, we got about $4 to $5 million in cash, and we also have a big credit facility with BD Capital. So, what we've been able to do in the last 5 years is really take a long-term view, and in my opinion, on how to build a great royalty company is over a decade. It's not something that you do immediately, because what happens is if you focus on assets that are cash flowing today and you're trying to buy those, one of two things will happen. You'll either buy an asset that has a very low quality counterparty, or you're going to end up paying a very high amount of premium to where these things trade at. And so, we've built this portfolio really for the future, and really for this cycle that we see playing out in the precious metals. I mean, I believe that we're there. Inflation's picking up significantly this year. I think we're going to see it even more significant next year. And there's no better asset class than I think you can own from an inflationary perspective than a royalty company, and primarily a royalty company with a huge amount of growth built in. And so that's really what you see here, going from 5 producing assets to, upwards of a dozen over the next 5 years to potentially 24 in the next 10 years. And all this is built in. All these assets are being advanced by the largest blue chip mining companies in the world. They're spending hundreds and hundreds of millions of dollars on these assets for your benefit as a Metalla shareholder. So that's a little bit about Metalla. Again, we trade on the NYSE under the symbol MTA and also the TSX Venture under the symbol MTA as well. So Peter, back to you.
Brett, thanks for that overview and thanks for those insights on the business model. Next up, we have Taj Singh of Discovery Silver. Taj, the floor is yours, and go right ahead.
Thank you very much, Peter. Thanks for having us here. So I'm Taj Singh, President and CEO of Discovery Silver, and just a few short slides here to give you context on really our focus, our flagship Cordero Silver project located in Mexico. We are trading. We trade on the TSX Venture under the ticker DSV and also the OTCQX DSVSF. There will be forward-looking statements, and then just to get right to it, the basics of Discovery and our flagship Cordero project. The project is a PEA stage silver, zinc, lead, gold open pit project located in Chihuahua State on a major gold silver belt. A lot of long-lived, robust mines near us. A selection of them are shown here, but definitely the right place to be. And obviously, Mexico is the #1 silver producing nation in the world. First off, the resource. It's as I mentioned, I don't know if I have mentioned it yet, but it's one of the world's largest silver deposits. The resource sits at 1.1 billion ounces of silver equivalent, and 90% of this is an M&I. So it speaks to how de-risked and advanced this project really is. And that was just recently released, the resource for the project, an updated one. Our focus right now is the PEA. So within the next few weeks' time, we'll be releasing a PEA on the Cordero project. We are really going to be focusing on a high-grade subset within the larger resource, a high-grade subset. There's two kind of components to the deposit, oxides, which are a smaller component of it. The engine room is the sulfides, but the oxides, the higher grade subset of this is close to 30 million ounces at 60 gram per ton silver equivalent. That's at a $15 per ton NSR cutoff. And the sulfides, again, within the very large resource, there's a very nice high grade, high margin, 510 million ounces in the M&I category, sitting at over 100 gram per ton silver equivalent at a $25 per ton cutoff. So again, definitely, grades that are going to drive some very nice economics. In terms of metallurgy, extensive testing has been completed on the project. There's been 4 phases of testing done on the project. We recently completed a program through 2020 and into 2021, and the silver, zinc, lead, sulfide recoveries were very consistent across the deposit pit phases and the various rock types, and we had recoveries of 85 to 90%. So very simple metallurgy, which obviously again speaks to how advanced the project is and how de-risked it is. And then the other key value differentiator for us is our cash position. We've got over $75 million of cash in the bank, no debt, and that puts us in a position to be able to advance this to construction within the next 18 months. Or so, and probably have, because of some in-the-money warrants that should be coming in next year, close to about $70 or $80 million of cash in the bank when we have a construction decision. So a very chunky part of the equity capital need for the build we also have. So that puts us in a very good position. Looking at kind of the catalysts for the story and the timeline going into 22, we completed a large drill program, a phase 1 drill program, started in late 19 when we acquired the project from the previous operator, Levon Resources. We drilled about 100,000 meters or so on top of the 125,000 meters that was already done. So one of the larger programs in the silver space that's ended at the end of Q2, kind of our cutoff for the resource. At the same time, I noted we did an extensive metallurgical testing program that also ended around the same time. And those two both then obviously were inputs into the new resource estimate. And subsequently, within the next couple of weeks, as I noted, a brand new PEA for the study. Seamlessly, phase 2 drilling started. That's focusing on the PFS, so any kind of very obvious near mine expansion. And also there's some high-grade veins, some very high-grade veins that flank the open pit area. We'll be working on drill testing those, and they could, the upside to those is they could add some very, very high margin material to be blended in with the open pit material to further improve economics at the PFS level and FS level. And then we also will be doing property-wide drilling in 2022. We've got 35,000 hectares, a 35,000 hectare property package. The resource area occupies less than 1,000. So obviously, very good kind of land package for obviously for an eventual open pit mine, but also very interesting for the exploration potential. We've got about 8 or 9 targets that look very compelling. I've seen very limited drilling, if any at all. So we hope the area is really ripe for a brand new discovery in 2022. So our kind of approach for the PEA, really our objectives are at least a 15-year mine life. We've been pretty open and public about this. At least 15 million ounces of silver equivalent annual production per year. Bottom half of the cost curve and low capital intensity. And we think if we can deliver these characteristics, it'll firmly establish Cordero as a tier 1 silver asset. So that's really what our objectives are. The approach is, I've talked about it before, but we're really looking at increasing the cutoff grade. We're going to prioritize head grades of over 100 gram per ton, especially early in the mine life to drive cash flow, NPV and IRR, and then use stockpiling and various kinds of kind of mining sequence strategies to really, again, drive cash flow to the front of the mine plan. And development capex is a big one. I talked about the low capital intensity. We are going to target a initial heap leach production of 15,000 ton per day with sulfide mill throughput of 20,000 ton per day. And once the capex of that is paid off, you would expand then the sulfides to 40,000 ton per day. And obviously, if we hit these kinds of numbers, Cordero will be a top 5 primary silver mine in the world, and potentially even higher as production increases. And just to wrap up, a lot of assets. There's not the number of assets in the silver space is a lot less than gold. In the silver space, it's very hard to find assets with margin and size. We have both of those, and on top of that, I think what really makes discovery a compelling opportunity is the third characteristic of scalability. Not only does it have margin and size, but it has scalability, and that speaks to the fact that most silver mines in the world, primary silver mines, are underground mines, vein-style deposits. You're kind of either in ore or you're in waste. We've got a very, very large open pit that you benefit from the margin expansion at higher silver prices, but you also benefit from a very significant resource expansion as silver prices go up. So we're working on showing a project that works at current silver prices, and actually materially lower than current silver prices. But we've got a very significant kind of torque and leverage, I think, that's unparalleled in the silver space for when silver really starts moving.
Thanks, Taj, for that great overview on Discovery Silver. So, gentlemen, I think we're pretty much ready now to jump into our panel discussion. I'm going to throw out some questions, and I guess we'll do the rounds. And I guess you can each jump in where you feel you have something to contribute. So the first point I'd like to bring up, given I guess a little bit my talk on silver and your views and your expectations on the silver market. What is the silver market's biggest challenge from your perspective? Maybe we can start with Morgan.
Thanks, Peter. So one of the challenges, and coming from more the operations side too, is the market in the future is gonna result in less folks going into mining. I mean, we see it in Canada, I see it in other countries. The human capital side, whereas we're going to need to change the way we automate, change the technology we add to mining to account for the lack of a generation interested in mining to start. But I think that's going to dramatically affect the amount of silver available. Obviously, there's some great companies coming online with some very great silver projects, but I really like to look at the human side of it, because I think that's one of the most important parts to remember, is it still takes people to do the mining, and without the people, we have to come up with innovative ways to work around it. And as a generation, I'm a millennial, and I look at that, and not many of my peers or friends know about mining, but or are interested in going into an underground mine and operating on a jackleg. So I think there's some awareness that needs to happen in the industry, in mining in general, but in silver, I think the demand is going to skyrocket, and we will not have enough supply.
The biggest challenges for the silver market going forward?
Peter, was that for me? I'm sorry, you were muted for a minute there.
I'm sorry, that was for Taj. I'm going to repeat. So, Taj, where do you see the silver market's biggest challenges as we go forward?
Yeah, for me, the one that's kind of seems topical, Peter, is it's a theory out there of this price manipulation. Some say central bankers, some blame the big banks and the use of derivatives, high frequency trading for the declines of the price of silver. There's worries about the discrepancy between paper silver and physical silver, fairness of London trading and declining inventories at COMEX, and even the leasing of silver. And so if you think about it, silver is very volatile because the silver market's much smaller than the gold market, so it's easier to influence it. So, and obviously there's been a few institutions that's actually been fined for influencing or manipulating silver prices. So that's one of the things that I think is a challenge and comes up fairly often. And I think what leads into the fact that really right now it seems like it's a waiting game. You're gonna have to have some patience. Everything looks set to move up very strongly, but right now for the past little while, it really seems like silver price has been on a treadmill. Same with gold. Although the vast majority of those who are in the know, they're really predicting silver prices to move steadily higher towards and through 30, if not way past that. So it's that waiting game and the patience seems to be a little bit of a challenge right now for investors. Is what I found as a topical challenge.
It was just something I think recently in the last sort of couple of days about JP Morgan settling something about spoofing. We've heard about that many times. It just, it doesn't seem to go away completely. These things keep coming back, and I think it's maybe unfortunate a little bit that it might discourage some people, but yet I think these are more sort of short-term issues in terms of how it might affect the silver price. And if you look over longer periods, these are just sort of blips that get taken care of, and but they're good points for sure. I think that again, as I say, people will maybe unrightly or to themselves unfairly, shy away. But there's just so much potential in this sector. It would be a shame to not give it, more exposure in their portfolios. Brett, what are your thoughts in terms of the biggest challenges for the silver markets going forward?
Yeah, I mean, I'll take the other side of the coin from what Morgan said and just say it's really focused, on investment demand from the majority of the investment community. I mean, if you go talk to the average person on the street, and this also extends into gold, but I think people have a bit more of an understanding than gold and silver. But nobody even knows what it is anymore in the younger age groups. I mean, the older generation, they used to use silver. They had silver in their, silver dollars. I mean, the silver dollar used to be made out of silver back in the day, believe it or not. Most of these people are dead, unfortunately. Like, they're dead. And we've got this younger generation where, they tell me about 45 different shitcoins and everything that goes with it. Pizza coin, pancake coin, polka dot coin. I mean, you can go on for years, and they'll tell me all about every single one of these coins. They watch this, they study it. They've got it on their phones, and you pull out an ounce of silver, and they're like, "What's that?" Like, it. Did you pick that up from a different country? I mean, they don't even know what it is. So at some point, I think that inevitably we will see this transition to real assets, and for the most part, most of these coins and tokens, and really where a lot of the driving of the kind of global investment community is going right now. I mean, it's not real. I mean, people say that there's a limited amount of supply of all of them, but there's I don't know, 30,000 coins now, and there'll probably be another 30,000 by next year. So there's unlimited supply of these coins, of these tokens that are out there. But silver is in just an incredibly unique spot. I mean, I've never seen a spot for silver and gold, but I mean, silver especially. Again, it's just so crazy to think about. You've got in a world where interest rates are significantly negative. Like, it's not just they're negative 1-2%. I mean, the Fed puts out. We just saw an inflation print of 6%. The reality is that inflation's probably running 15 to 20%. And so if you've got $100,000 in the bank, a big chunk of that is really going to be gone next year. And I think inflation, we'll see even more inflation next year. And so at some point, I think there will be kind of a realization where capital will start to heavily flow to real assets. And so this will go into real estate. It'll go into a lot of other things. I think we're seeing that already. But I think it will eventually, at some point, flow into gold and silver. And when that does, silver's just, I mean, look, you've got over half of the supply every single year for the last 5 years basically gone, because it's all gone to industrial metals. And in order to make it economic to recycle the silver component in the industrial metals, you need triple-digit silver. So that silver's gone, like just gone. Just write it off. It's not here. You'll never get it back. I mean, maybe $100+ silver, you'll start to see some of it come back on the market. And you see, with solar, I mean, solar from 2015 till today is doubled. Okay, we're at the beginning of really kind of I mean, it's almost like an industrial revolution. We're going through an electric revolution right now as we transition off fossil fuels. I mean, we're seeing this being pushed by governments globally. And so, I mean, I see solar demand alone probably going up, probably upwards of 50% a year, every single year for the next 5 years. It's not going to take long before solar panels by itself is eating up half of the silver supply. So when you get kind of that type of backdrop of such a strategic metal where it's got all these different attributes as a monetary metal, a very high in demand industrial metal, we're seeing silver being replacing a lot of the rare earths that are being used in the EVs. Like, silver is really a replacement for that. And given that China produces all the rare earths, I mean, I think we're going to see more and more industrial applications for silver. I think we're going to see huge demand out of that. And at the same time, it's one of the most incredible real assets that is around. So it definitely has all the different attributes to be something that has just a ton of potential in my view. So, well, a little bit of a tangent there, but wanted to get that out there.
That's good. I mean, no, some great insights there, and your early comments remind me of a video that I saw circulating a few years back on silver, where some guy was standing on a street corner and asking people, giving them an option if they wanted, I think it was a 1 ounce silver coin or a bar of chocolate. And the vast majority picked a bar of chocolate. They had no clue what the ounce of silver was worth. And obviously they thought the chocolate was worth more. And, that just speaks volumes to how understood silver is. And so, I think it's going to go through a cycle of discovery and understanding. What we had that big silver squeeze at the early part of this year, I think, introduced silver to somewhat to a new generation, and it's a start. It's a start, but certainly at least it is one. And I think, yeah, exposure will come. People will start to understand it. It's one of those things where it kind of all comes at once. And but when it comes, it's going to be a big flood. So my next question or point is, I guess question would be, which silver demand sector do you think is most likely to impact the silver price in the next few years? And let's start with Taj to get some thoughts from you on that.
Perfect. I mean, it's pretty clear that the big catalyst for silver is investment demand, Peter. But if you just look at the industrial demand, I think, I mean, Brett talked about it's electrification and green infrastructure is the big thing. Electric vehicles, my understanding, they're about 100, and by 2025, about 100 million ounces will be used. By 2030, it's over 300. Solar panels will be probably at 200 million ounces by 2030, so that's a double. And even for high tech stuff, say the 5G networks, that goes to like 30 million ounces, and it's about 8 million ounces now. So between just those three applications, you're talking over 30 million ounces, and that's like 30% of the current supply of silver. So lack of new projects, new mines, valuations are nowhere near what they should be. Precious metal mining companies are trading at less than half the valuations of the S&P 500. So those are the kinds of things that are really, I think, from the industrial demand side, are really gonna help drive silver price up. So even if you had a point against investment demand increasing, the basic thing is industrial demand itself is very positive for silver price over the next while.
I mean, like you say, echoes some of Brett's comments. And so, if based on what you just said, if you look at just solar and EV demands over the next few years, already solar is 10%. That's supposed to grow 13% this year. So it's going to be over 11% this year over last year. EV demand is supposed to grow. Automotive demand is supposed to grow 50% in just the next sort of 4 years. So if the numbers you're talking about between solar and EV demand in, say, 5 to 10 years, right now they're about 15, 16%. They're going to account for maybe double, 30%. Where's all the silver going to come from, Taj, besides discovery?
Exactly. No, it's there's definitely going to be a supply deficit.
Absolutely, it's certainly looking that way. And like Brett said, recycling is minimal. We probably need much higher prices to justify recycling. And so what's in landfills right now is basically there forever. We're not likely to see that silver again. So maybe it's future recycling. I'm going to put the same question to Morgan now. Morgan, what are your thoughts on which silver demand sector is going to impact price the most over the next few years, and why?
I have nothing to add to Taj's statement. It was great. It was exactly what I was thinking. So I'm sorry, Peter. Good job, Taj. I think you highlighted it perfectly.
Good. Okay, why don't we just jump to the next idea, our topic? What I'm wondering is what kind of appetite do the capital markets have to fund silver exploration and royalties? Actually, why don't we stay with Morgan? You're on the exploration side, hopefully eventually on the development side. But so what do you think? What kind of appetite do you see for capital markets to fund the projects that you work on?
Well, I mean, for us, we raised money in May, and it went fairly well. But being a newly formed silver company, we're expanding on our plans. We are utilizing our capital to drill. But as far as raising money, we saw a dip in the summer. The markets tightened up. A lot of people went on vacation, it seemed like. And as far as like progressing mines, I think once you have a clear path, once you have a clear idea of what you're looking for, I think the money's there. If you have a good team, you have good projects. I think those are really important things, as well as jurisdictions. So, between those three items, I mean, we say that in the space, and a lot of, Peter, you talked about it as well, is having those three key points. I think the money is there. And like Taj and Brett were saying, the demand is going to be there. So I think people are starting to realize that they need to invest in it. So as projects come online and as new companies are formed, you're seeing them being funded, but the jurisdiction and the team and the assets are almost the most critical portion right now. But as well, yeah, that's all I have.
All right. So why don't we sort of touch on the same question with Brett? What do you think, Brett? Appetite from the capital markets to fund silver. Let's stick with royalties in your case.
Sure. Well, I mean, what I would say is that a lot of the appetite for funding, anything from the junior silver explorers, all the way up to the royalty companies and everything in between, is really driven off capital flows within the sector. A year ago or a year and a half ago, kind of early part of 2020, we did see some pretty significant capital flows come into the sector for a very short period of time, albeit, but a lot of companies were able to raise a lot of money during kind of a 3-month window. And then since then, it's kind of been crickets. The capital flows have been slowly bleeding out of the gold equities, even though gold and silver have actually, done okay. The actual metals themselves have done okay. The equities, on the other hand, really since the summer of 2020 have been in just a bit of a grind. And that's what we're seeing from kind of the investment community. I mean, I've spoken with some of the largest precious metal funds all around the world. It's again a slow bleed for a lot of them as well. Redemptions, slightly down on some positions, so they're afraid to sell something at a loss to invest in a new investment. So I think we will see this shift. I mean, we've been consolidating. The charts look actually fantastic. I mean, we had a down move yesterday, but precious metals are always volatile, and they always have consistently false breakouts and false breakdowns. I mean, it's just the most tricky. They're both gold and silver, the two trickiest metals to invest in on the planet. I mean, they're just, nothing ever makes sense with them. So it's just one of those things where, you got to take a long-term view, and then you want to position yourself in, in a handful of great companies with great management that will give you the type of leverage and exposure that you're looking at from a risk perspective. And so, I think, from royalties down to exploration, you can put together a great, portfolio there to get it, and just wait. And that's kind of where I think you need to be on this.
All right, thanks, Brett. So I'll give Taj a minute or two to respond as well, and then we'll jump to Q&A. So Taj, what do you think? What kind of appetite do you see from the markets to fund silver exploration and development, maybe in your case?
Yeah, Morgan and Brett made some very good comments, and I echo them. I think past couple of years overall, it's been strong and gaining momentum, but I think it's fizzled out, as Brett noted. Recently, I think all these head fakes in silver and gold price, a couple of people just getting weary, as I talked about before. But obviously, the investment demand from the numbers you showed is it's like the highest it's ever been. What I would say is more sophisticated investors are then thinking, well, I can get exposure to the metal. Then I also get now exposure to the torque and leverage of a new discovery, or for some resource that wasn't economic at sub 20, but now it's very economic at high 20 silver, for example. So that's kind of like the extra layer. I think they get some extra juice if they can pick the good names and really navigate through. I think there was a period, and Brett noted it, where everyone, all of a sudden, silver companies were popping up everywhere. But really, it goes down to the team, the asset quality, the jurisdiction, and I think the appetite's there. And the other thing, just to close off, is silver just goes, right. I think the people who are getting out of silver might end up missing it, because once it goes, it's gone. And as we've all seen in previous, in almost every precious metal bull market, silver lags gold, and then boom, it's gone. So I think it's exactly what Brett said. Patience. You got to wait. Play the long-term view. It's coming. Everything is set up for a huge rip here. So yeah, that's those are my. That's a little bit of color on that.
Okay, thanks, Taj. Good point. I mean, I did notice if you look at how silver and silver equities performed since about the middle of last year, when silver took off and ran to almost $30. Silver and silver equities started to outperform gold and have maintained sort of this gap above gold since then. So at least to me, it's telling me that we may be in the beginning of this new acceleration phase for silver, where it continues to outperform gold, and the gold silver ratio continues to fall. And in any case, I think the outlook remains pretty strong. So we're going to jump now to Q&A. I'm going to read from a few questions or points that some of the viewers have. The first is from Chris Marcus, wondering what they tell, I guess referring to you guys, to the mining companies and royalty companies. What do they tell their shareholders on days like today, when the price of silver is down 78 cents? So, Taj, do you have some some thoughts or comments?
Yeah, listen, it's I'd say it goes back to my previous point. It's you're playing the long game here. Silver and gold, but silver even more so volatile. These up and down days are just it's part of the it comes part of the package, and you just have to take it all in stride, because silver could go up $1 tomorrow very easily. And we've all seen it where that kind of thing happens. So you just take it all in stride. Yeah, that's really all you can say on a day like this. Exactly. And I was actually joking, like, what a day to have a silver forum on a day like today.
Right. Agreed. Except if you're a little bit contrarian, then you think to yourself, this is a great time to be hearing about silver and silver implicated mining companies, because you're getting a bit better of a deal today for sure on those names. So maybe that's a better way to look at it. All right, so I'm going to just jump over to Morgan right now. Morgan, what do you think? Actually, why don't we just do the next question? What do you expect? When do you expect the backlog at Assay Labs to be resolved? This is something that we hear about pretty regularly. What are your thoughts on that? And what are your thoughts on what that indicates?
Well, I'm going to say hopefully not for a while, unfortunately, because that means a lot of exploration going on. And like all the gentlemen on this panel have said, the demand's going to spike between now and 2030. As a junior exploration company, it's hard, right? You get a backlog there's a backlog in the Assay Lab, so you say you're drilling, and 4 or 5 months later you come out with results, right? But there are some ways to work with that, but I don't think it's going to change anytime soon. Depends on what the finance market's doing as well. I mean, to Brett's point, as how much money is going to be funneled into the sector, which is going to dictate how much exploration drilling can happen, and that obviously feeds the assay backlog. So, I mean, I don't see it slowing down anytime soon, but you never know. I'm hoping it stays pretty active, which means there's a lot of good companies doing drilling.
Yeah, good point. Actually, let's jump back to Taj for a sec on that same point. What are you seeing with backlogs at Assay Labs and the outlook from there?
Yeah, really quickly, we did probably over the past 18 months 100,000 meters. For sure, during the kind of early days of COVID, for several months, there was delays. Typically, we're like 6 weeks turnaround, and it was taking like 3 months. But I will say it's almost back to normal for us specifically. I know there's peers out there that are still having delays, but for us specifically, yeah, it's almost back to about 6 weeks, sometimes even 4 weeks. So things are picking up. But I think two reasons. One is the COVID situation caused delays. And I also think exactly precious metals movement, silver's movement. A lot of new companies are drilling, which is a good thing and an active. It's good to see a lot of companies being active, but it looks like, at least from our side, things are getting a little bit more in control.
Super. Okay, I'm going to jump to the next question from Patrick, and I'm going to pose this question to Brett. So, Brett, I'm going to sort of condense the question a little bit. Essentially, is the mining industry doing enough to educate young people about the importance of metals, allowing for all the technological gadgets and important technologies that they are benefiting from day by day, in brackets, without acknowledging the full chain of origin production?
I mean, I don't. This is a tough one because, you know, we live in a different world than we used to, and unfortunately, mining is considered a dirty business. And you know, millennials don't understand that their iPhone won't work and they can't post on their Twitter account if they don't have these metals. You know, they just think that the metals come from outer space or somewhere else. Like they don't want big holes dug in your backyard, and they don't want all of the carbon emissions coming out of the you know, big bulldozers and trucks. So you know, unfortunately, it's, you know, the mining sector really needs to rebrand itself as a whole. This needs to come from the top. I mean, it needs to come from Newmont and Barrick and Agnico. I mean, I've spoken to not only some of the larger mining company CEOs, but also the major royalty company CEOs about this. I do feel that they are asleep at the wheel, unfortunately. You know, they don't fully realize like the implications and kind of how this really could affect the market over the long term for this sector. And, you know, I do feel that they need to get their act together and really make an effort, a combined effort to rebrand the mining sector for really what it does, which is great. I mean, the mining sector is going to replace fossil fuels. This is a good thing because the renewable energy, the renewable technologies, once you have these solar panels, it's not like you need to go back and tap, you know, 45 different oil wells. Like you've got these solar panels. Once they're built, they're done. They're making energy. They've got long lives. So we need to see more of that. And you know, I've been pushing from, you know, my seat. Unfortunately, my seat's not the most you know, influensive place to be, but I mean, I do have a direct line to a lot of the major mining companies. So I mean, I really hope that they get their act together here and work on that.
Thanks for that, Brett. I get the sense that if the mining sector doesn't wake up to really, like you say, educate, especially, you know, some younger generations maybe on how important it is to how they like to live, there's going to be a big shock. And it's at that point when the shock comes and at much, much, much higher prices. And maybe that's what it's going to take, is these higher prices for them to realize why are all these metals costing so much? And if they really dig in and they start to understand why these metals cost so much, they'll get it. They cost so much because you feel you don't like what the sector or how the sector operates, and yet you can't do without it, and you need it to get towards the the evolution, the progress, the lifestyle that you say that you want. So it's an inevitable thing. It's going to come one way or the other. I'm going to jump to a last question, and that is very quickly to Morgan. What catalysts do you see over the next 12 months that can make gold and silver perform better than they have in the last 12 months?
That's an interesting question. So to go off that education side of it, which I always like to talk about, and which Brett Brett just pointed out. I think the lack of people going into it, the lack of people understanding the space will maybe drive a little bit of lack of investment in it to a sense. People do need to wake up. We as a generation need to wake up. So I think the demand as it grows and as maybe the crypto becomes a lot more volatile than it already is, people will start to seek maybe a more safe haven. And that's the gold and silver space from the investment standpoint, but from the growth standpoint, as the demand keeps going up, I think it's just going to keep going. And like Taj said, it's sitting right for a breakout. You look at the charts, you look at it's lagging gold significantly still. So that's as far as I can tell. I'm not an analyst. I'm more the mining guy. So it's something I'm looking forward to. That's for sure as a junior mining company.
Excellent. Thanks, Morgan. So I think we are basically out of time now, so we're going to have to wrap everything up. I'd like to thank everyone speaking today. Morgan Lextron from Silverhammer, Brett Heath of Metallo Royalty, and Taj Singh of Discovery Silver. We have a few outstanding questions. I just want to reassure all of the viewers that we're going to get those questions to the individual companies, to the speakers, to get some feedback for you. And I'd like to thank everyone for attending today. This was fun.